risk. Our team is positioned to help you make the most of 2024. You never stop working, and neither do we.
Hi there, good afternoon. This is Mark Talaski with Advanced Trading. I'm joined by Michael Reginelli and Brian Basting. We're going to run through the September 12th USDA report, the different things that came out in this report, and see what we learned and kind of take it from there. So from that, Michael, I guess I'll start with you. What's the first thing kind of caught your eye in this report?
Kind of a boring report in a lot of ways. I think the main thing that got everybody's attention was the yield increase. You know, USDA took yield up half a bushel for new crop. Majority of the market was thinking that we would drop by roughly half a bushel. So, you know, compared to the average trade guess of net 1 bushel per acre increase versus expectations, I think that got a lot of headlines. I think the highest estimate coming into the report was 183.5, so 183.6 bushels per acre. I mean, it's a big yield. We printed a record 177 last year. That's certainly got people's attention. The other thing that, you know, maybe wasn't advertised as much or took a minute to get into was the carryout, because new crop carryout did actually decline even with a higher yield. So, you know, that higher yield added another 39 million to production, but the carryout net drop for this 24-25 crop year was down 16, and that was all related to old crop adjustments. You know, they took exports up 40 million for old crop, the marketing year that we just exited. They took ethanol up 15, so a net 55 million bushel increase in the old crop demand. It's going to tighten up that carry-in balance into new crop, and the USDA offset that to, you know, to some degree, obviously, by taking the yield up. So that was a surprise. I don't think the market knew what to do with it. Corn traded at the 12-cent range, unofficially closed, 1-2 cents higher, probably.
Yep, paying a quarter higher.
There you go. So,
406.
You know, 12-cent range, both sides have unchanged. I think the market's still struggling with what to do with it. We were playing with data earlier as we were talking about it, though, and I think going back to 2010, when the USDA's increased yields in September, I think there's only been 1 year in the last 14 that they've actually dropped it in October. That was in 2018. So that's something to note. If you wanted to build a case that big crops tend to get bigger, if you're going to argue that we're going to see a big correction based on some of the hot and dry weather that we've seen and the general reasoning that most people thought we'd see a slight drop, there's a better chance than not that we don't get it in October if the USDA stays consistent with how they've operated the past 15 years or so.
Yeah, I saw also that this was the 22nd year out of 27 that the USDA has been higher than the average guess.
Yeah.
So it shouldn't have been that big of a surprise that we were on the higher end, but it did surprise the trade from that perspective.
One small wild card I'd add to that, Mark and Michael did a terrific job of summarizing things. I think the USDA may adopt the FSA acreage in October report, harvested acreage. There may be a wild card there, but we'll just have to wait and see.
So that could change the total production.
It could. I mean, every year is
a
a little different, but sometimes they tweak that. Yeah.
Okay. Is that common? I mean, how common is that?
The changes usually aren't huge, but it's something that's a wild card every year. Yeah.
To that point, we probably need to keep an eye on Sep 1 stocks data too.
Yeah.
After, you know, if they're going to make a sweeping change at the very end of the cycle on old crop demand, you know, we'll get the quarterly stocks report at the end of this month. That tends to move markets a little more than these monthly WASDEs, but that demand increase probably puts a little more emphasis on what that actual Sep 1 stocks number is going to be.
Yeah, totally. Brian, on the world side, what stood out to you? I didn't see any change in Ukraine corn production. Anything else jump out at you on the corn and bean side?
No, you hit the nail on the head, Mark. It really is a bit surprising that the USDA didn't do anything with Ukraine, because it sure sounds like, from all indications, hot and dry has been the pattern all summer. And Ukraine, of course, is on pretty much the same calendar as the U.S. here, and hot and dry in July and August, but they've left production and exports unchanged. I take a close look at that in October going forward. If I had a bias there, it sure feels like those numbers could be dropping back a bit.
Agreed.
But point being, they didn't change it here this month. So they did change one thing though, Mark. They lowered Brazil's exports. For the crop they just finished harvesting, they lowered Brazil's exports 2 million tons. So that may open up a bit of a window here for the U.S., and I defer to Michael on this, but also Brazil's having some challenges with low water issues. Serious drought going on down there that's disrupting their logistics, so on and so forth. maybe that swings a little bit more business back to the U.S. here.
And if we were to see a cut in Ukraine, that could also stimulate some more export demand.
It's something that we can track weekly, of course, with the export sales report. Are these changes getting the end users' attention overseas? I.e., Brazil's having trouble shipping. We're having some issues in Ukraine. Maybe I should be buying more $4 corn here in the U.S. Time will tell, but it's something we can track every part of every week.
Low prices cure low prices.
For sure. On the wheat side, we saw the European wheat crop get cut a little bit, left Argentina unchanged. Any of those kind of stick out to you as a surprise or as expected?
A couple of them did, because you're right. They lowered the EU crop by 4 million tons. Too much rain. Anyone watching the Olympics would see there was a lot of rain in Paris. Not that a lot of wheat is grown in Paris, but around that surrounding area, very wet. Challenging harvest. Germany, too, had too much rain. So they lowered that crop 4 million tons. They took the exports down 2.5 million tons. However, Australia's crop was increased 2 million tons this month. More acreage and a higher yield in Australia. Now, that crop is being made as we speak here in September and October, so that number is not carved in stone, but 32 million ton crop in Australia is a healthy crop, a big crop. Not as big as 40 from a couple of years ago, but a big crop. So that offset that a bit. And another thing that offset it was Stats Canada came out this week and increased their old crop carryout of wheat way above market expectations. So the market, or I should say the USDA, built that in today by increasing Canada's exports by 1 million tons with no change in production today, just because of the larger beginning stocks, primarily anyway. And so we're looking at some changes there. And one other change, USDA also increased Ukraine's exports 1 million tons. So you could argue that it's still a very competitive environment export-wise for U.S. wheat as we start the second quarter of the crop year.
On the South America, we saw CONAB numbers this morning as well, and they were relatively unchanged from a month ago. USDA was unchanged month on month on the Brazil corn and soybean production. Still a pretty good spread between CONAB and the USDA on production. Is there a bias to which of those two entities is right?
That's a great question. I guess based on what we're picking up, maybe the USDA has some room to nudge their production number down a bit relative to CONAB. I don't think they're going to take it all the way down to almost 116, which is where CONAB's at, but they're at 122 now. And the USDA did take the exports down 2 million tons today. CONAB's got a much lower export number than USDA still. So, again, something to keep an eye on. I guess what we can get our arms around here as this harvest is wrapped up now in Brazil, we can actually quantify how much corn is being shipped out of Brazil. And one way or another, they're going to meet, maybe in the middle, but for the moment, I guess our internal bias is maybe the USDA is a touch high on production. But that 2 million ton reduction in exports today was a big deal. The USDA acknowledged at least that they were a little high on the exports compared to last month.
Is there any historical pattern to when CONAB and USDA tend to kind of tighten up that range, or?
It's a great question, because this year is almost making some new history in terms of this late in the season.
I think it is.
This late in the season, as Michael says, usually we know pretty much, and that they're pretty much hand in hand. This year, I don't know if we've ever been in middle of September this wide. So
Okay, so something to watch in the October report for sure.
A wild card.
Yeah, so we'll get both CONAB and USDA will come out in early October with their updates.
And that will be the first estimate from CONAB also on 24-25 new crop, the crop that they're planting right now. That'll be their CONAB's first guess, if you will, or on safrinha crop for the planted in early 25. So yeah, we'll take a look at that in October.
Michael, on the corn side and soybean side for that matter, I mean, we're continuing to see conditions stable, where every week we continue to watch the condition ratings kind of just hang in there, maybe drop a
Fairly
point or
steady,
two. Yeah,
slightly lower.
Nothing real changing, but yet drought monitor continues to kind of expand. Over the last month, we've seen pretty good expansion, particularly in the eastern half of the U.S.
Right.
But pockets starting to surface in the Midwest as well. What's the merchandiser's opinion today on managing this crop going forward?
It's tough, because I think a lot of people were leaning on the dryness, and we do have more dryness in the forecast here. I mean, I think throughout the month of September last year, we saw steady to lower ratings as we kind of work through the year. And granted, we're still 12 to 13% ahead of last year, good to excellent on corn, but they did work a little lower in September, and voila, we still spit out a 177 plus yield for the first time. So it's hard to say, even if we get a little attrition right on conditions this month, that a 180 plus type yield isn't achievable based on how much better it is on paper than last year. From a merchandising standpoint, I think most people are in harvest prep mode. Domestic basis across space, continues to feel steady to weaker in spots. That's been the trend for a little while now. And it always happens, right? As you converge old crop to new crop, you're always going to see values, drop down. From an end user standpoint, you don't want to own old crop higher basis a day longer than you have to if new bushels start flowing. So starting to hear early yield reports. It's pretty variable in some areas. Some areas are reporting really good early yields too. So still kind of all over the map. There's a lot that we're going to learn here over the next, in the coming weeks and certainly coming months as far as that goes. But from a merchandising standpoint, I think a lot of people are in kind of wait and see mode at the moment. New crop ownership books are very light across space, general statement, but I think it holds true across regions. We don't own a lot of this crop as we're coming into harvest. Most areas are expecting a fairly big handle. A lot of it's going to come down to what the U.S. farmer does. Is he going to sell? Is he going to store? And from that standpoint, we have fairly wide carries in the spreads, but we don't have big ownership books and short hedge positions against them if you're in the commercial space. So what you're doing is you're monitoring posted bids. You're trying to make sure you're managing your operation appropriately and, monitoring space and making sure that you can service your growers here this fall and defend it. But it's gonna change as time goes on. Some of it's going to be based on whether exports ramp up, what the basis environment's going to call for, pace of selling from the U.S. farmer. It's a lot of decisions that are going to get made, but I almost feel like it's a little too early right now to start getting ahead of it.
Yeah, so next couple weeks, 6 to 10, 8 to 14 day, at least yesterday, was dry, right? So warm and dry. Yeah. So we should continue to see harvest continuing to kind of gain momentum rather quickly across much of the Midwest, and so we'll be interested to see. So we got a USDA report at the end of the month, and that's kind of a big one for wheat. Is what do we look for as we go into the latter half of September for that September 30th report? Michael mentioned the stocks being a big part of that for corn, but is there any other pieces we should be watching?
There's actually two reports that day, Mark, and people tend to overlook the small grain summary, but we did not get a production update today for wheat. That'll be our next and basically our final production estimate for wheat until January. That small grain summary. So we'll see what these final winter wheat yields turned out to be, and of course the spring wheat, which are still being harvested up north, what those yields are. So that'll be something to keep an eye on, crop size, and that September 30th small grain summary. But the stocks number, as you guys did a terrific job talking earlier, can be a wild card. This will be our first estimate of June, July, August wheat feeding. It sure felt like, with the spreads, the wheat-corn spreads where they were, I don't think wheat was flowing into the rations. I don't think it's going to be a big wheat number. The wild card there is, again, the production number, if it's higher or lower than expected. But stepping back just a second, that corn number sometimes can be a wild card. You think by the end of the crop year, USDA has their arms around crop size. Both corn and beans, I should say. Sometimes USDA will revise. They'll go all the way back and they'll revise their 2023 old crop, in this case, production number. And you'll get a surprise in that June 30th stocks number, not only for wheat, but maybe for corn and beans. So regardless, it'll give us a final number of crop size and that final quarter of crop feeding, or corn feeding, for example, June, July, August, how much corn we fed there. But there have been years where that's caught the market off guard.
Yeah. Not really a USDA report, but we also saw the La Nina, El Nino update here today, the monthly update. Was there anything in that kind of jumped out to anyone?
The analog years that are similar to what we're looking at here this year in terms of looks like a slow transition from El Nino to La Nina. But as that transition takes place, Argentina crops tend to struggle, specifically wheat. Of course, Argentina wheat was planted there back in May and June and early July. But the analogs that are consistent with this year would tend to suggest below average yields for Argentina here for this crop that they're going to harvest here coming in December and January. So that's something to keep an eye on. They are very dry right now in Argentina. The critical month for Argentina wheat is October. Corn and bean yields, A little bit more variable. There's been some years where Brazil, as the analog that we're going through now, has had a subpar bean yield. Some years where it's been okay. It's a little bit too early to say in South America there. For the U.S., I don't see anything there. It's obviously we just get this crop hopefully safely harvested and tucked away, and then we look ahead to 25. But for the moment, Mark, it looks like the biggest issues will be Argentina dryness and how that will that continue into the corn and bean season into December, January, and February.
Yeah, so it'd be critical to watch here as we finish up the next, I guess, 30 to 45
Yep.
days will be pretty critical
Yep.
for that
Critical
wheat
wheat.
crop, and then
You bet.
ultimately for their corn and bean crop.
You bet. You bet.
Michael, on the farmer side, as we kind of finish going into harvest, I mean, obviously they're all looking for answers. No one really has one that is a bulletproof strategy here today, but feels like there's still exposure to the downside on both corn and soybeans and wheat to some degree. Is there, I mean, obviously there's carry in the board. What's the message that we should maybe be passing on to the growers in the country?
Sure. I don't know that there's a one-size-fits-all strategy. Far be it from me to say that there's a best strategy out there, because what that would take is a crystal ball, and we need to know exactly what's going to happen. We're 2 weeks into this marketing year. We got a long way to go before it wraps up. And, once we get post-January, the supply numbers are going to be fixed, at least domestically, but not globally. We still got a long way to go until we get to that point, let alone what can happen in the world from a production. And then we got to talk about demand. And there's a lot that can change on the demand side of the ledger this year. Exports are always the most elastic demand category. If you need to throttle demand up or take it down, exports tend to be the one that moves the needle. That stands for both corn and beans. There's a lot of questions on the export program this year, and you could build a bullish case or you could build a bearish case depending on how things crack here. So from a marketing standpoint, what I would suggest is however you approach this, you want it to be defendable. I would say in general, most growers are undersold coming into this marketing year. Nobody's probably in love with where prices are, but the fact is we have to market a crop, and there isn't a guarantee that prices are going to get better. Carrying the board, I've talked to friends who farm and a number of them about this exact thing, because we pay so much attention to it when we talk to commercial elevators and we talk to commercial demand points. Carry on the board doesn't inherently guarantee you a higher price later on. It is easy to fall into the trap when you're looking at, you look at the list of prices right now and you say, well, July 25 corn is quite a bit higher than D's 24 corn. That is true, and just like July 25 beans are quite a bit higher than Nov 24 beans. That's all well and good, but you're not hedging that market unless you're physically, as a grower, going out and selling futures, or you're making a forward cash sale. And if you're not doing that, the idea that you're going to capture carry later on in the curve is still a bet. It's still you're still wide open exposure to the downside, because you could get there, and that price that looks higher today, it could be well lower than where it's actually trading at the moment, despite the fact that we have this carry in the board. So unless you're going to take action and make a sale, whether that's futures or cash out there, you're not capturing that carry. So what I would say is, there's going to be a need for cash flow this fall. There still are factors out there that can work balance sheets higher from a carryout standpoint and work prices lower. That's not saying it's all doom and gloom. There's certainly things, especially on the corn side, where I can argue, that prices could move higher as time goes on, as they always can. There can always be a left hook, and there can always be a black swan as well. But make sure you're protecting your balance sheet and trying to defend it the best you can. Make decisions, as you need to. And the key with that is protecting downside. And there's a lot of tools out there to be able to still participate in upside. Low prices tend to make option volatility cheap. If you sell cash this fall and you want to stay in the market, or you want the opportunity to capture higher prices later on, look at buying calls or look at buying call spreads. Stay in the market to some degree on the upside, but make sure that the market doesn't hurt you worse than it could.
Yeah, we've seen that this year, where it's a very defendable strategy
Totally.
for guys to manage that risk, and it's very defendable. Like you said, it's today we could see a South American hiccup with the corn and soybean production, push prices higher through the winter months.
Sure.
Guys would be disappointed if they sold across the scale, but with higher storage rates out there this year, it's a lot easier to justify the value of an option to at
Agreed.
least give yourself a fighting chance. If the board was to rally, you're in the space, but if not, you're at least you got a floor. I mean, we very well could be flat. I mean, that's a possibility too. Doesn't necessarily need to go up or down, but
Right.
You're dead on with the carry aspect. I think we could easily see carry erode if all things carry out like the market's potential. And I mean, my suspicion is next month when we see the USDA print a South American corn and soybean production, it's going to be rather large.
Yeah.
It'll
I
be
think that's a pretty safe bet.
It's probably not going to be a small crop.
Yeah.
So at a minimum, it'll be very similar to what we printed a year ago. Although it didn't happen, but nonetheless, it did have a good crop. So that'll be interesting to see how that plays out.
Yep.
So I guess finishing up, I mean, any key talking points that you guys saw that were worth noting in the report beyond what we talked about?
I thought both you guys did a terrific job from the producer standpoint of defending your balance sheet, but giving yourself flexibility in the market.
Yep.
If surprises occur, in this case, from a lower price level than a year ago to the upside. Doesn't mean that prices are going to go higher, but you've taken control of your marketing. You're not in a win-lose situation where you just put the crop in the bin, either in your on-farm storage or take it to town, and don't do anything. Strong lesson learned from the 23 crop this past year, that you really need to defend that balance sheet.
Yeah.
Particularly with the crop insurance period expiring at the end of October. That's the last backstop, if you will. So I thought you guys, again, get control, defend your balance sheet, but give yourself some flexibility.
Control is key, and things can change, and we just got to be positioned for it. So,
Yep.
yeah. So, well, good. Well, thank you. Thanks again, everybody, for joining us for the USDA report summary today. It was good. Be sure to like and our YouTube channel, ATI YouTube channel. You can watch the ATI Media info every day, I guess, right, at 9 a.m. And then we'll be back doing this again on the 30th, right,
bet.
with the stocks and small grains report.
You bet.
Have a
So-
safe and successful harvest.
You bet.
Safe and successful
Safe
harvest. Absolutely. Have a good week. Thank you.
Welcome to Advanced Trading. Join the community of thousands of subscribers for access to industry-leading risk advisors, insightful research, and engaging live streams. We are your go-to channel for the latest grain market and livestock analysis. Subscribe now.